Financial freedom for the lazy person. That is the name of what surely will become, if not already, an Amazon bestseller. Friend of the channel, friend of the community, Dion McNeely has written the next amazing real estate investing book. Again, it is now available on Amazon. The title of the book, again, is Financial Freedom for the Lazy Person. Excuse me. You can actually find the title as the title of this daily financial news. Do yourself a favor, pick that book up again one more time. Financial Freedom for the Lazy Person. It is undoubtedly going to be an amazing read and tell all the ins and outs of our boy Dion. So let's get into the news. We got a bunch of housing data. We got a bunch of earnings. We're on the cusp of a Fed rate decision tomorrow. Why don't we start with, we'll start with some earnings. We had Whirlpool, makers of washers, dryers, refrigerators, things of that nature, slashed dividends and lowered guidance. So they missed on top line, which means revenue, missed on bottom lines, which means earnings, and just all kinds of an ugly quarter. Waste management beat top line, bottom line, revenue up 19%. Once again, proving trash is cash. Yes, folks, waste management, trash is cash. Cadence beat top line, bottom line, had strong AI-driven product demand. And then finally, the Hartford Insurance Company missed on revenue, but did beat on earnings. This morning, Royal Caribbean Cruise Lines missed on revenue, but beat earnings. Actually said demand is accelerating, which I'm guessing means demand was slow at the beginning of the quarter, hence you missed on revenue. Revenue was up 10% year on year. UPS, another nasty quarter. UPS pulls guidance again and cites macro economy uncertainty. PayPal beat top line and bottom line, raised guidance. Apparently not as much as the market wanted, given stock reaction this morning. And then the shining star of the morning, SoFi. SoFi beat top line, bottom line, raised guidance, added 850,000 new members in the quarter. Pretty blowout quarter for those following SoFi. Procter & Gamble actually highlighted that they expect to have a 1 billion, yes, folks, 1 billion, that's a lot of zeros, hit from tariffs. They are indicating that price increases for about one quarter or 25% of their product portfolio will be coming in Q1 2026. Yes, tariffs impact will come through. It just may not be as quick as maybe some of the economists were thinking. Nick Timiraos from the Wall Street Journal, often seen as the Fed mouthpiece. He is saying that the Fed is currently fractured into three camps, right? The folks that want to cut, the folks that don't, and the folks that are confused. Those are my words, not his. He does say that this upcoming meeting tomorrow, will Powell hint of September rate cut? Again, this is my dovish hold. If he hints at a rate cut, it's a dovish hold. If he says basically nothing, then it's a hawkish hold. So that's really what I'm looking forward to tomorrow. And then finally, as we did talk about yesterday, Nick highlights, again, from the Wall Street Journal, will the Fed presidents display which camps they are in after Wednesday? You got to remember, folks, we are about to get a lot of Fed speak, probably starting as soon as Thursday, certainly as soon as Friday, where Fed go out and basically say which camp they are in. Also, lots of talk about, will we get one or two dissents tomorrow? Again, I think that will be market moving. Again, I think I talked with Taylor from Life Goal Investments. There's been plenty of one president dissents. In fact, we've had two of those in the last 8 months. I do not recall a time where two Fed presidents didn't vote that direction. So it would be very, very interesting. Had an interesting report from Charles Schwab. This is a big change from 2023. Just 2 years ago, Americans felt like they needed $1.65 million net worth to feel wealthy. 2 short years later, it is now $2.3 million. That is, what is that? What would that roughly be? 32, that'd be roughly 40% increase, maybe 38%. 38% increase just in 2 years to feel wealthy. Mike Simonson out with some great data talking about the active inventory. Active inventory is up 27% year on year, but only 0.4% week on week. Listings are definitely slowing down. 72,000 new listings, up 2% week on week. Pending sales are up year on year. Close. We'll see where these will be closes in October or September. Median price still up 1%. More homes with price reductions than any July in 12 years. Again, lots of stuff going on there. Just checking something out that just came in. We can also talk about Case Schiller and FHFA. Case Schiller, again, this is for May. This data is often very delayed or old, in my opinion, but it did come out this morning. We have prices up 2.8% from a year ago. That is the lowest since August of 2023. And then FHFA also came in at 2.8. That is the lowest in more of a decade. If you're following the markets inside Case Schiller, we now have San Francisco, Dallas, Denver, and Tampa. So 4 markets out of the top 20 declining. We have New York City coming in with a robust 7.4% increase. Wild to think about. Also on the plus side, you've got Chicago, Cleveland, Detroit, and Boston. Really, that northeast corridor is up. We did have a monster acquisition announced today. We had Union Pacific trying to buy Norfolk Southern for $85 billion. Yes, folks, $85 billion. I think it'll be interesting to see if this acquisition goes through. You have to assume there'll be some at least monopolistic concerns in such a big acquisition. But again, $85 billion. Saw a video from Tom Nash. Tom Nash has been on the channel. Tom Nash talking about investors about to go from greed to extreme greed on the Fear and Greed Index. It is interesting to watch market behavior and meme stocks and things of that nature. But yes, we are apparently about to go into the extreme greed area. We are starting to see some pain, as we've been talking about in the multifamily space. There is an investor who is about to lose 3,000. Yes, folks, 3,000 units in Houston, Texas. According to the article I read, it's Calkin Capital. The investor is about to lose grip on $1 billion portfolio. This is apparently eight multifamily properties are going to auction on August 5th. Let's shout out John. John joined the school community in the last 24 hours. John, thank you for being here. Make sure you introduce yourself. John was referred by Mark, the financial firefighter. Remember, folks, Mark is willing to comp your first month for free. So if you follow Mark on Instagram or YouTube, work it out with him. He has a special link that you can use, and you will get your $20 back. So shout out John and Mark for doing that. I'm guessing we got 8 or 9 spots left that Mark will reimburse. So don't miss out. Sign up today. We did get 2 economic reports this morning, one good, one bad. We'll go with Jolt's report first. Jolt's report, again, job openings. So we want a bigger number, not a smaller number. Jolt's 7.7 million openings last month. It was expected to fall to 7.5. It actually fell to 7.4 million. Remember, last month, the Jolt's report surprised to the upside. So this kind of a give back from last month. And then consumer confidence. Woo! Consumer confidence was last at 95. It was expected to go to 96. It actually came in at 97.2. So consumer confidence clearly getting better. Again, uncertainty is clearing. Stock market at record highs, the wealth effect, all of those things certainly helping out. But again, very interesting to look at. Again, last thing we'll talk about, shout out Lance Lambert from Resi Club. Zillow. Zillow is now calling for a negative. Yes, folks, negative 2%. Zillow has gone negative on housing. Zillow says that we will see a 2% decline in home prices by the end of 2025. I don't know about you, but I think that might be a little much. I have not changed my call since January 1st. Frankly, I haven't changed my call in 2.5 years. We're going to be plus or minus 1%. Same rule applies. We got all the appreciation early in the quarter, or early in the decade, early in the decade. And it is going to take years to break our fix our broken housing market. But as wages increase and rates generally slide slowly, stuff will get more affordable. Folks, again, remember, do yourself a favor. Go to Amazon right now and get Dion McNeely's new book, Financial Freedom for the Lazy Person. Dion, thanks for all you do. Thank you for being a friend of the channel. Thank you for narrating my books, clearly. And we will see you guys tomorrow. Remember, check out Steadily. If you are a landlord, they can help you get at least get a quote. See if they can help you. Sometimes they save you money. Sometimes they don't. But hey, it is worth a shot. Folks, take care. Have an amazing day. Later.